everybody. This panel is about capital market and equity investments. So the topic is that shipping is making great earnings and cash flows look as if they have a decent run for at least 2 more years. However, vessel values are high and it may not be the best quartile of the cycle to invest. Owners and investors to discuss the best strategies, how to invest or to stay put and enjoy the earnings. So a little bit of introduction. My name is Peter Lee. I'm from Reed Smith, the law firm. So I do ship, sale, purchase, financing. Usually we look at deals from more just the pure cash flow point of view, what the bank concerns. So our firm has 35 offices, about 1,500 lawyers, about 100 lawyers in shipping. So it's a very interesting topic for me. Enough introduction for me. May I introduce Georg and Christian. So Georg's from Graham Car Carrier. Can you say a few words and let us know a bit more about your company?
Absolutely. So for those who do not know Graham Car Carriers, I'll just give a brief little introduction. My name is Georg Whist and I'm the CEO of Graham Car Carriers. We are a tonnage provider in the car carrier space, operate 21 vessels and have been in this business and only focus on this business for 40 years. We listed the company on the Oslo Stock Exchange back in January 2022, and we had a short and very nice life at the stock exchange, and we were acquired this summer by MSC, Mediterranean Shipping Company. So now we are back being a private company, and that gives us many interesting perspectives, keep on serving our clients. We can make very quick decisions, we can be very flexible. We are private and we have access to a large capital and resource from the MSC group. Our focus is on growth, so you should be seeing us becoming bigger and bigger over time as we make more and more money.
Thank you, Georg. And Christian, a few words about Borealis.
Yeah, good afternoon. My name is Christian Stiefel. I'm the Chief Financial Officer of Borealis Maritime. Borealis, for those who don't know, is a privately owned investment and asset management company specialized on maritime as an asset class. The business model ultimately is that we are marrying private and institutional capital with opportunities as they arise in the maritime space. That could be in merchant shipping, offshore services. We effectively cover it all. Since inception, the company is headquartered in London. It has been founded in 2010. Since inception, we have deployed more than $2.3 billion of capital across 9 investment funds and across 220 vessels, both owned and financed. So it has been quite a growth story. And yeah, that is a few words to Borealis Maritime.
Well, thank you both. So let's kick off to ask very basic questions, because the topic suggests that there is a boom or a boom is coming. So do each of you actually feel that, whether it's generally for shipping or specifically for the sectors you are in? So is it a yes, no, or maybe? And could you tell us what signs or noise that gives you that feeling that it's a bull market, or we are here, or we are actually coming down? Maybe Christian?
Yeah, from our perspective, we've seen a cross-segment boom firmly over the last 4 years, and great.
Last 4 years, so we are already
certainly since the beginning of the pandemic, and it started obviously with containers and dry bulk. It moved into tankers, and then ultimately also offshore services. But yeah, generally speaking, for those that were invested with sites, they're reaping the benefits, which is great. But clearly, for fresh capital deployment, it's a different story, and one to be more cautionary about.
More cautionary.
Certainly, for the time being, the way I mean, we see obviously the asset play has been replaced by a yield play, which means the residual value risk component becomes ever more important in underwriting your returns, and most certainly to protecting your capital, which is the most important thing for Borealis. So overall, there are some segments which are more sanguine than others. We would say offshore services is one of the segments we are still net positive on. That is due to fundamentals. It has been mentioned here before.
Fundamentals.
Very low order book, relatively old fleet. The counterparty balance sheets in the oil and gas sector are obviously very strong. You have this potentially underappreciated demand pull from the renewable side. So overall, quite an interesting sector still to be involved in.
So is the balance sheet, the cash flow,
Yeah.
the supply, limited supply?
Fundamentally, you're seeing a situation where the supply is not challenging. At the same time, as mentioned, the asset play has more or less happened. We do still see some room for asset appreciation, but today we are covering contracts on an implied cash yield of more than 20%. So for us, that is good business. So now, obviously, you need to see how you elegantly maintain and eventually exit this position. Again, as investors, we are not here for the forever term. We're here to generate the best return for the investor. On the flip side, if you think about Borealis, a lot of people connect us with container shipping. Now we've done well on it. Historically, we had 50 container ships. Now we have a handful. But that segment, for instance, is one where you do have to be more disciplined, more cautious, just looking at the fundamentals here.
Still booming, but...
Sorry?
Still booming, but
well,
more careful.
It is booming for those that are invested. But again, for the fresh capital, that's where you need to probably be a little bit more cautious. We've seen very good structured equity deals to be done in the first half of 2024. Now, again, probably the time to take a step back and be patient. Certainly the opportunities will come again.
Okay, thank you. How about Georg? What do you see from your side of the market? Do you think it's booming, and what gives you that feeling?
I think anyone who looks at the car carrier market gets that feeling, to be quite honest. We are at double rates than the previous boom, which was in 2008. So if you look at the earnings that are being made at the moment in the car carrier industry, we are at, as I said, double rate than last peak. So the boom is definitely here. It looks like it could last a little while. It's driven by some key, I would say, changes in the way that people are buying and consuming mobility.
And more than 2 years, the topic suggests, right?
No, I think from a long life in shipping, I think it is very difficult, and you have to be a bit modest, that to believe that you can see more than 1 to 2 years out. I think people are bluffing. I don't think anyone can see beyond 1 to 2 years. I think there's always something that happens. So I think now we are definitely at the boom. We are enjoying it, but there are, as I said, some fundamental changes. And for those who are not too involved, I'll give you a few numbers. China, if you go back just 3-4 years pre-COVID, used to export less than 1 million cars. Today, they are exporting 5.5 million cars. So, of course, all this has happened without there being any additions to the fleet. So, obviously, at the moment, there is arguably between 50 and 100 ships too little to carry it. So, we see it. Cars are getting carried in containers. They're getting carried in dry cargo ships and inefficient means of transport. So, that's why I think this cycle will last longer, because we have that sort of cushion that needs to be worked off before we are in equilibrium or can maybe look for a softer market.
Yeah, look further into that. I know that grain car carrier started in 1982. So the company probably has seen quite a number of booms in the last 40, almost 40 years. Yeah. And so internally, have you talked about this, and what have you learned during the previous booms that might be relevant for this boom? Anything, any do's and don'ts? Any mistake you don't want to make again?
Of course there is. I mean, we always learn, right? And we try to not repeat mistakes from the past. I think if you go back on the car carrier history, it's actually been a very, very stable, good, lucrative business for most of the years. The previous boom was up until 2008, and then we crashed down after Lehman. Very disciplined industry, more than 100 ships, which is about 15% of the fleet, got scrapped. So we recovered quite quickly. So what I would say is that what we've done differently this time is that we have gone longer. We have time chartered out our ships longer. Last cycle, we were more concerned about inflation and cost of the operation. We've learned that that is the less of our concern, so we go long. We stay close to our customer, and we leverage cash flows, not LTVs. And I think this is the biggest mistake people do, both in car carrier, but also in traditional shipping. You leverage LTVs, values, not cash flows.
But LTV is very common in all the loan agreements. I mean, I think the bankers all look at that as probably the number one thing they would look at. What do you have to say about that?
Well, being an ex-banker for 18 years, I know where they come from, and I think it's just you need to simplify. You need to have some simple rules in your loan agreement. But the more you move towards the liquid side of the asset classes, like like car carriers, like offshore that's been talked about before, it's really a cash flow financing. So you should be matching your cash flows with your debt structures, more than saying 50% LTV or 30 or 50 or 70.
Compared to, for example, the most common type of bulk carriers, right? So for those assets, LTV is, in a sense, quite useful for the bank.
The challenge is that the values go up and down, right? So a 70% LTV in today's very peaky market, which have been now discussed throughout this conference, is a very different nominal number than what it is in a low tide. And basically, it's the nominal number that drives your cash flow break even. People are now saying, oh, I can finance an MR. It's very low cash flow break even. It's just $23,000 a day. And you go out and look where that's been historically. That is not conservative. That is very aggressive.
I see. That's quite interesting. And now a question for Christian. Borealis started in 2010, which probably was an overall low for the whole shipping industry, right? But
we like to enter at the low point.
Yes. And I look at your website, and it says 1.4 billion of equity was committed by Borealis since inception, and 2.33 billion was deployed by Borealis under both equity and debt strategy. So it seems to be a very successful strategy over the last 14 years. But for the upcoming next few years, with the change in situation, will there be any adjustment to your previous strategy? Anything you will focus more or focus less? Maybe more JVs, higher leverage? So can you share some of that?
I mean, obviously it all comes down to track record, and we were fortunate enough to generate the results for us to show that very spectacular growth on the investment management side, and we've done a lot. I mean, we started out with a pure distressed equity strategy. If you look around today, we effectively have three next to it, and it's actually our latest strategy. We have we call it an infra type operating lease strategy, equity. With an Asian angle, more to that a bit later. We have a direct lending arm. So we have done expansion, and many of those strategies are still in the maturing phase, and some of them are just starting out. So that's really it. The focus right now clearly is on this infra type structured equity product. The team here is very positive about the next couple of years. We believe that is the right product in that market, and our investors agree to us, who in effect are repeat investors with us. This is another token of appreciation for what we do. That not only are we continuing to maintain our partner relationships, but we also then expand them. We are constantly thinking about new ideas. They don't necessarily have to be plain vanilla equity, plain vanilla debt. There is a lot that can be done on the marine side. Things such as trying to figure out marine insurance products. You can think about probably entering very localized markets, maybe on the offshore side. We have done that on the Middle in
insurance
the Middle East.
product as well.
Sorry?
Like what kind of insurance product are we?
Look, there's a variety of things. What we've done, first of all, there is an asset management side. We have, as Borealis, for instance, allowed for ship owners to come with us on our slip and effectively take benefit of the very competitive insurance rates that we have, as an example. But then there are other things that are of interest. Don't want to necessarily talk too much about it, but what is certain is that we are constantly brainstorming about products which we ultimately think can have a home on the institutional capital side, which is ultimately our main partnership for the firm. But again, we in the past we've always thought a little bit about charter in, charter out platforms. There's obviously the big topic of offshore wind. That market will, on a volume basis, grow dramatically. The big question mark is it the right time to commit today, or is it probably more wise to wait a bit? We all see certainly the ordering of maritime assets in that space. So again, for sure, there will be many different things that will come out of the Borealis group. Today, however, let's stay focused. The infrastructured equity product with an Asian angle is what we are committed to today.
Infrastructure equity.
Yes, maybe as a last point, and that makes me very happy because I was part of putting the whole thing together. Our direct lending product, which is under the Australis Maritime banner, the proof of concept is there. We believe it has longevity, and obviously, if you look around over the last couple of years, it's fair to say that we are one of those alternative lenders who have really established themselves in that space across literally all geographies.
Would you go outside your comfort zone to think about or to invest into a very new part of the maritime sectors? Is this something you also consider?
That's part of the brainstorm. However, very strictly speaking, we would not do that without our investors' consent. So we have some clearly defined strategies, and we're going to pursue it that way. That being said, I just mentioned it. One of our investors was willing to look into something like a local OSV market, such as the Middle East, where we've invested into barges and landing crafts. Literally out of the yard and with a 3-year charter where you get full payback. Now that is for us, from an investor's point of view, I don't want to say a no-brainer, but a very good thing to put together. Now these are small deals, but again, it's our job to identify them, pitch them to our partner, and ensure that ultimately this whole thing comes together. Separately, a very important part of the business is also building out the asset management side. People might know that next to the investment management we have bunker procurement. I mentioned the insurance slip. We have technical and commercial ship management services for literally all of the segments that we are invested in, and that is not simply for our captive fleet, but that is very much for third-party management fleet. And the good news is that third-party owners are coming in, and that is obviously something where we are very keen to continue growing this out, so that will ultimately our capital a full stop shop, so to speak, to engage in maritime.
Thank you, and to you, Georg. So within a very small car carrier industry, could there be any new areas that you might be consider is a good time to invest in?
Yes, I think just to put things a bit in perspective, I mean, we are now part of the MSC Group, which is the world's largest shipping company. So obviously in my company or our company, we are focusing particularly on the car carrier. And we are a tonnage provider, so we need to make sure that we are relevant to our customers all the time. So in that effort, we are now, challenging ourselves, and we'll spend more, quite a bit of money on decarbonization initiative, just to make sure that when the tide turns, because it will turn one day, that we are the most relevant. We are not only from a green perspective, but then green means that you are actually lowest on the cost as well, because from a consumption perspective. So we are investing quite a lot in the retrofit of propellers, rebuilding our bulbous bows. All our ships, when they now come into dock, will have silicone low friction paints. We're putting in shaft generators. So really decarbonizing what's on the water. Because let's face it, we've talked about on this conference, and of course all the ship brokers want you to scrap and build new, because that's what suits them, right? So, but we're not going to make it, guys, if we just do that. We need to work on the assets we have on the water. We need to improve that. That's the only way we're going to get to net zero in 2050.
So that
that's
also
where
means the ship could last longer.
Well, the ship could last. Well, the ships could probably last as long as they do today. If we don't do this, we have to retire them early, and that is not a green approach to the world. We need to work with the assets we've got, in addition to building new.
So in the financing terms, that means you're saving the costs and you remain more competitive, and you can also offer a better price for your client?
No, exactly. So it's about being relevant, right? It's about not denying what's coming, and it's about investing in your existing tonnage. So we're not shy to buy new assets, but we're taking over some 15-year-old ships next week, and then we will upgrade them. We will make them as efficient as they can be, so we're relevant for our existing customers.
As Borealis, we would agree with that approach. It doesn't make certainly any sense from an investor's point of view to shorten your useful life. The more we can actually extend it, certainly the more helpful we are to our residual value assumptions.
That's very, very good to hear. So in that sense, do you think all the regulations is actually a push for the company towards into this area, or it's not? It just makes your life more difficult. All the green regulations.
To be honest, I think we're ourselves to blame. EU was just fed up, sitting waiting for IMO and ship owners, who are very slow movers. So they said enough is enough. I think the EU Fuel Maritime is a terrible piece of legislation. It's going to be very difficult to implement, but it has to be done. But we can thank ourselves, because we didn't push hard enough. IMO is too slow. So they just gave it to us. We just have to now deal with it. And what I think, people are so concerned about this EU, I think other countries around the world are going to love it. It's a huge tax collector, so I'm sure the US will pick it up, and I'm sure China will pick it up as well, or maybe Japan as well. And then there will be all kinds of tax regimes around the world, which makes it even more complex. But if IMO doesn't push this, it will be forced on us, because people are fed up waiting for our industry.
And for Gram Carrier and ship owners in general, with more cash in hand, probably it's a good time to invest into this and make your company better and more relevant to your client, right? Rather than the downtime when cash is limited.
Well, you can look at it two ways. You're right, we have the cash now, and a lot of people have cash, so they can do it. But on the other side, if it was poor markets, a lot of unserious companies would have gone bankrupt, which would have been good also. So I think it would have been good in any market, quite honestly. It has to get done.
Yeah, well, that's very insightful. Any questions from the floor? Seems not. If that, thank you very much for your insights and comments. Thank you very much.
Thank you.
Thank you.